The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble and lovably, squeezably soft host, David White, for another edition from TFNN.com, your headquarters for technical trading and investing. On this day in 1897, the first drunk driver pled guilty and was fined 25 shillings. George Smith became the first person ever arrested for drunk driving after slamming his cab into a building. I take it had to be horse-driven in 1897. But interesting. He pled guilty and was found. He got kind of interesting. 25 shillings. I don't know. It kind of sounds like a whole lot back in 1897, but who knows? Don't really know. Of course, if you can see the picture, it's Otis the drunk. He was always my favorite drunk. Never got behind the wheel. And when he got drunk, went right in and laid down in his cell, had his own key, knew exactly what to do. Old Otis. They don't make drunks like that anymore. So anyway, other things we have going on here. And, of course, today, at least for the last couple hours, it's all about Apple, and we're going to watch it closely. Apple's been bouncing around from about, 502, 503 to 505, and just not a lot going on with it. And I'll explain why. And that is just some of the things going on. They did announce a new iTunes radio store to go up against Pandora. Pandora came down about 3%. Then pretty much came right back after they showed it, so not everybody thinking iTunes radio is a big deal. No new sizes. They basically announced two new phones, an iPhone 5S and a 5C. The 5C is going to come in a bunch of colors that make it look like gumballs. The more expensive 5S is going to come in three colors, black, they call it gold or champagne, and white. But not a big deal. One of the things that Apple did for its marketing campaign early on with the iPod was use the earbuds that had all white earbuds and white cables to the iPod, because everybody had black ones. This way, when people moved around, they would know if they saw the white color that the guy probably had an Apple. And that was kind of thing. And it wasn't very long until people started making white headphones, so those with other MP3 players could act like they had one. But it became a kind of a marketing gig out there for them to have all white. One of the things that if you've been around technology very long is originally when new technology comes out, even if it was the original Ford Model T, Ford was very famous for saying you can have any color as long as you want black. And the idea was to make one product very good instead of a lot of products very minorly, but also to get the product out there. And when you start seeing colors, that tells you that, especially from Apple, that tells you that you've gone into a very mature marketplace. One of the problems that everybody is trying to figure out right now, we'll get into it in just a second, is whether or not this new cheaper phone that they came out with today is going to cannibalize their higher sales. And it is unclear right now. I'll almost guarantee you it will have lower margins. We'll talk about that more in a second. I guess it's over. I've got the TV on in the corner. I didn't see anything else. I suspect that Apple will sell off if it is in true over, and they haven't announced. It's down to 501. I haven't announced China Telecom as one of their new customers. The reason why is China Telecom has 700 million or 740 million subscribers. They could probably sell a ton of iPhones to them. What no one else is willing to ever bring up on any of these shows, and I bring up on everyone, is what you have to do to sell something in China. And that's either give them some technology, buy them off. There's a lot of different things. China Telecom has, basically there's a handful of standards all around the world. China Telecom has one that is all to itself. It is the only company that uses that standard. And Qualcomm made a new chip so that anybody wanting to make a phone that would work anywhere in the world would, including this China Telecom spec. It is unclear whether this new iPhone uses that chip, but a lot of people were thinking that Qualcomm made that chip specifically for Apple so they could go into China Telecom. Now, China Telecom is owned really by the Chi-Coms, or the Chinese communists, and they're going to demand that they get all the source code for everything that Apple does, and that's always going to be a bugaboo. It isn't a problem with Android because I can get all the source code. I don't have to pay anything or even sign a license, although I would be under a license to actually get that code. I could compile it on my own machine and put it on my own Android phone tomorrow, although I think it takes about 22 hours to compile. So it's not something that most people want to do, but it is, you can get all the source code, and that's what China wants to know. A lot of Chinese government runs on Ubuntu, which is a Linux version, and they do that for the same reason that they pretty much love Android, and that is they can get software that is well tested and fairly inexpensive. At the same time, they don't have to worry about NSA putting backdoors in it. The NSA, I'm sure, are bugging every one of their cell phone towers. But at least for the hardware, they don't have to worry about it. And that's what probably Apple can't ever come to grips with, which is giving away the crown jewels, all their software, and because they probably find it on the internet the next day. That is the reality of that. And of course, if you made all your stuff free from the beginning, like Android, not a big deal. If you're a closed, walled garden like Apple, becomes an enormously double-edged sword. Yeah, you get a lot of business. Yes, and then the next day you find 1,000 different viruses because suddenly your software, which hasn't been challenged before, is being readily challenged. So kind of interesting. The more expensive version is going to finally use the 64-bit faster chip, and a lot of people were thinking about that. It is another ARM's holding, and everybody is still speculating that the next chip that Intel uses will probably be at least made, if not designed, by Intel. In fact, I'll probably get to that later, but Intel had their own little soiree out today where they're pushing a new chip for a very, very, very small chip, but very powerful, and uses about 1/10 the power of their Atom chips, which are pretty useful already, but for smartwatches and the like. So it'll be interesting to see what Intel comes up with it. But we're 501 off about $4.50 on Apple right now. But the only thing that probably really would have changed stuff was China Telecom. Here is the problem that we may see Apple sell off on in a few days. A couple years ago, actually, this goes until August of last year. So a year ago, Apple's cost to build an iPhone 5, or was it a 4 at the time, was $208.99. They got $674 from the phone companies and made basically $465 on a device that cost them $208. They were basically making the kind of margins you only get selling software on hardware. There's only a few companies that have been able to carry off these kind of margins. Intel is, I think, at about 58% now, 56%. That they could get 69% gross margins and 222% markup is absolutely astronomical, and why they were at $700. Now, I actually did a special report in the Tech Insider to show what happened when they started selling the tablets, and that is even their best tablet came in at a 38% gross margin, and the iPad Mini comes in at just at 30%. If you get a spreadsheet out and figure out, do you have to sell 4 or 10 times as many iPad Minis to make the same price or the same profit you made off of one iPhone sale? I don't think that they'll be able to ever keep that gross margin up for very much longer. And the question is, how much would they have to give away to China Telecom to really get a new market? I think they'll do everything they can. Whether they can get that market from China Telecom is a whole different issue. But right now, just the phones not working is a big issue. It's not like you can just take one and hack it and make it work in China. It just doesn't work that way. But what I probably am looking at, I think it's $99 on a 2-year contract for the new cheaper iPhone, and $200 for the 32 gigabyte version. 16 gigabyte version is $100. Difference in memory is about $30. So to go up one rung is about $70 in margin. And the question is whether or not how many people will buy that and what their actual margin will be. But what it will probably do is drop their margins from 69%. My guess is that the 5SC will probably come in margins around 40%, which means that they'll have to sell about 5 times as many or 4 times as many to make the same profit they do on the current iPhone, and that's the rub. So just watch those gross margin numbers. I bet we start hearing a lot about those when they start tearing these things apart over the next couple of days, and we get a bill of materials. We can reverse out and actually figure out what Apple's going to be making on these devices, and I'll let you know hopefully on Friday. But I bet this being Tuesday, I bet they have this thing torn apart on the web by Thursday, and we see exactly what's in it, how much the chips cost, and what it costs Apple to make, at least on the new cheaper version. Other things in the news out here, just keeping out. Yep, there goes Apple, $497, and again, it's that China. I'll almost guarantee you they went to that one last thing, and it wasn't China Telecom, and that's what everybody was waiting to hear about. And of course, Dell is a done deal. Southeastern Asset Management basically says that Icon will not pursue additional efforts to defeat the transaction. I was going to get into this yesterday, but Dell is pretty much a done deal, and Michael Dell's going to get away with it. We basically had Icon come up and tell Michael Dell he had a deal he couldn't refuse. Michael thought he did and prevailed, and kind of an...
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Had a quick question in the den that said iPhone 5 versus Galaxy 4, which is the better phone? I think it depends on what you're doing. Of course, Galaxy 4 had a much bigger screen size. I actually got a fairly inexpensive phone, but I got it for one reason, and that was that it had at least about 125% longer battery life than either the iPhone 5 or the Galaxy 4 when it's running. I wanted to have something here in the office at home that if everything went to hell in a handbasket for my internet connection, that I could actually trade on it if I absolutely have to. I got a LG V720, which is a LTE and 4G phone. It's not extremely fast, but it has incredibly decent battery life, and it is fast enough for everything what I need to do. It's a smaller screen size. I think it's a 4-inch, 4.25 inch or something like that. So not a big deal. I mean, the big phones are great. I wanted something that would last all day, even if I had to suck data from it all day long, like I lost power here and I had to use it for a backup. For me, I don't spend a whole lot of time on the phone on a, you could use some of those other things. But what if I'm somewhere else? What if I'm stuck somewhere in a doctor's office? Do I want to be dragging extra batteries around? Somebody asked about using a extra battery pack and stuff. I wanted to be able to stick a phone. Question is the new fingerprint scanner the mark of the beast? I don't know, but the new higher-end phone is going to have a fingerprint identification biometric scanner on it. Those have had varying degrees of success. At the same time, all you have to do is have what's known as a fast boot cable to get around it. So it's to me, it is a ridiculous thing that is basically Apple's conjuring out here. Fast boot cable is just one of the USB style cables with one of the extra power pins hooked up. I actually have one for my Kindle, so I could flash the operating system to a third-party operating system and not use Android's, or not Android's, but Amazon's operating system on it. They have a bunch of software that they cram on there, just like Dell and HP cram all kinds of software you don't want on it. You can't take it off, but there are people that have compiled the Android operating system, especially for the Kindle. It's called the CryoGen mod, and I put it on there, and it's basically just like a Nexus 7, but it was a whole lot less money. And since I got my Android, my Kindle free, it was I didn't feel like spending much more money on it. But there's third-party operating systems that will make Android free of all the bloatware that maybe your AT&T phone or Verizon or other phones have, and it's nice because you can then start doing anything you want. If you're not real technical, probably not something you want to do. If you're a programmer like me, I've already written a few programs for Android to help me out with all kinds of things, including the show. But, I digress. Anyway, other things in the news. Microsoft's next Surface is going to be available September 23rd. Going to be a few things, better battery life. And the keyboard portion of the more expensive Surface Pro, as they call it, is going to actually have a battery that backs up the keyboard on it and give it another 2 or 3 hour battery life. But so much not happening in there about it being a really big deal. But it's interesting nonetheless. In fact, some people are saying it. Windows 8, I talked about the next version and how even developers like me couldn't test software like the Art of Timing and Trade Charts on it because they hadn't made it available. Microsoft took a lot of flack for it and actually released the final copy of Windows 8.1. I downloaded it last night. I'm going to put it on a machine tonight, and I'll be testing it to make sure if there are any changes that are necessary. But developers squawked fairly loudly. Microsoft did listen. At the close today, Delta, the world's second biggest airliner by passenger traffic, will join the index after the bell tonight in the S&P. It will replace BMC Software, which is being bought by Bain Capital. Other changes, Goldman Sachs, Nike, and Visa are all going into the Dow, which will replace Hewlett-Packard, Bank of America, and Alcoa. So we're going to see a lot of changes in the Dow very soon. One of the things that I try to bring up is the survivorship bias. We'll talk about this when we get on the other side of this commercial break.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We were talking about survivorship biases, and this is a good teachable moment, especially for new listeners to this show. There's biases in almost everything statistically. And one of the biggest problems that people have is they go, yeah, the Dow is up over so many years so much. What they don't think about is how many stocks came and left the Dow or the S&P 500 or the NASDAQ over all those years. And it causes what is a real problem in logic called the survivorship bias. There are charts out there that show what the S&P and the Dow would look like if you kept all the stocks in that eventually went bankrupt or left the Dow. And of course, it is a moving issue, probably much worse in the Dow than it is in the S&P. You've got 500 stocks there. Of those, 450 are probably going to still be in here 5 years from now. There'll be 50 that probably in 5 years that are gone, maybe even 25. So the S&P, a lot better about it. Dow, Of course, we're having 10% of the stocks move in and out of it, so you'll probably see some change in the way that the Dow actually acts in the near future. But of course, just before the break, we said, even a new airline stock coming in and out. But just know that Goldman Sachs, Nike, and Visa are going to be joining. That means that people that have ETFs will have to buy them if they don't already. And if you own Hewlett-Packard or Bank of America or Alcoa, there's going to be more of that stock on it. I don't think that the Dow actually means that much. It's 30 stocks. About 95% of them are institutionally owned, 95%. So they're, when they move, it's basically the 5% of people that could ever sell them or would consider selling them. Most people are stuck with them. If they're a fund buyer and they have to have a fund called the Dow Fund, then it's those stocks in there. The only chance that they ever get a chance to get rid of them is, of course, when one of those stocks leaves the Dow. And again, if you're an ETF, you have to sell it and you have to buy the next one. And that's where most of the friction in those companies come from. Verizon went to court yesterday. For those people that missed it, a lot of news going on yesterday, and I had phone calls, which you can give me a call at 877-927-6648. That's 877-927-6648. And Verizon has decided that it knows what's good for you. It went to court against the FCC, saying the FCC says you can't prioritize traffic. I have a Verizon to do this show. And, of course, Verizon Fios, very, very good service. Of course, the home office has it in downtown Clearwater, and it makes it very good. I have had almost no problems in the, year or so that I've done it, done the show on and off from home. But it is an issue when Verizon, as it has decided, doesn't want me looking at YouTube videos very much. Doesn't care if I use Netflix, but boy, does this thing hiccup incredibly bad on any kind of YouTube traffic. And this is what they're going to war in the court about. There won't be a decision until this late this year, but it could cause huge problems if Verizon would only let you look at their Netflix service, whatever that might be, or only let you use their version of Skype, whatever that would be. Everybody would have their own little fiefdoms, and the FCC said, "Niet." Verizon says, we can screw over our customers any way we want to. And that decision will come late this year, if not in January of next year. The bad actor law is in effect today. It was a part of the Dodd-Frank bill. And the Consumer Protection Act part of it. What it now means is that when you plead no contest, the SEC and some of the other government bodies will be able to disqualify you from ever being in the securities business and offering securities ever again. This is going to mean that we're probably going to start seeing more court cases actually go the distance because if you say no contest, it is the same as pleading guilty as far as this new rule goes. And if the SEC doesn't like you, they can ban you for life. Can't put you in jail, but they can ban you for life. And I think if you're probably a CEO of Goldman Sachs or J.P. Morgan, you may be willing to roll all the dice and take your company to the brink to make sure that you can come back to that business that's paying you $50 million a year. It's not going to cost you that much, and I bet they'll make their companies themselves actually pay the legal bills. So look for probably contracted legal maneuvering in the near future by the SEC. But again, if you get convicted after today, they can ban you for life, which they have not been able to do before. We were talking about Apple in the first part of the show. May not get a lot of charts in today, but there was an article, and it was mostly about Scully, who was a previous CEO of Apple, coming out and saying he didn't fire Steve Jobs. To me, it sounded a lot like I didn't want to say I was Yoko Ono breaking up the Beatles. I didn't fire Steve Jobs. He just quit, and I don't understand why. But I read all the articles at the time, and I thought it sounded extremely self-serving. And so I fired off a email to one of my buddies in Silicon Valley. He was the go-to guy on it. Here's his response. Scully came from PepsiCo, where it was all about the office politics. So the moves came naturally to him. But he hadn't thought past the first 30 days of the post-Jobs era. I'm pretty sure Scully is being honest when he says he didn't expect Steve to leave the company, and certainly not to sell 6.9 million shares of the stock, which cratered it, by the way. But that just shows how little he understood his partner, Steve Jobs. No one else was surprised by Steve's departure, though. Not any of them. And this is a pretty nice guy. His real name is different, but he writes under the name of Robert Kringley and had a rumors column in InfoWorld forever. And if you are interested in technology, I recommend this book highly. It's called Accidental Empires, How the Boys of Silicon Valley Make Their Millions, Battle for and Competition, and Still Can't Get a Date. And it really gives a lot of insight into how Silicon Valley used to operate, and really, to a greater extent, still does. Anyway, that's pretty much. We're going to get to the actual market and how it's moving out here. 242, and still up 9 points on the S&P. Cash 2.67 billion shares. Yep, he is on PBS. He had 3 specials that actually a couple of them were from that original book, and one about flying airplanes, where he was going to make his own airplane in 30 days. Kind of interesting guy, and kind of a little bit of a loose cannon at the same time, but had the best InfoWorld rumors column, and that was always what I turned to the first day to see what was going on in the computer world in the back when that was long before the internet. That's the mid-'80s and late '80s. If you wanted to find out what actually IBM, Apple, or Microsoft were lying about, you could tune into his column and actually find out what was going on, because everybody would rat you out if you were the president and said, president of Microsoft said Word 2000 something or other was coming out tomorrow, and you knew it was 6 months away. They'd certainly rat him out the next day so that they wouldn't get, be blamed for the next 6 months of why that program didn't come out. So it was always he was kind of the Snowden of the Silicon Valley. Very interesting guy. Anyway, he's very accessible too. I've called him, talked to him a few times, and emailed him and met him a few times. But interestingly enough, anyway, I digress. We got 2.7 billion shares on the consolidated tape, which is actually not all that bad. Kind of surprised that the market has not been moving a little bit better than that. But we shall see. Wanted to look at a few stocks. First is Netflix, NFLX. We had a gentleman was asking me whether or not, I think this is at $270 or something, if Netflix was going to go to 300. I thought it would gap up one day. It didn't gap up. It actually just ran a bunch of shorts above a $300 level, got to a high of 311.65, 311.63, something like that today. And 4.2 million shares, a little bit more than that actually. And it is breaking through that level. The energy is actually pulled back a bit. And see what else we have. Take a look at a few other things going on out here, just seeing if anything had actually improved over the last hour. Apple, 495.50. The option market makers had basically had this thing coming back to 475. Kind of interesting. I think I wrote that in today's newsletter in the morning. I'll have to go grab that during the break. But it certainly looked like option guys were not expecting any big, huge move out of Apple, but it is down $10 and still is, 13-14% of the NASDAQ 100. Seeing if we see any others. Looks like the money's coming out of that and going into Tesla and some of these other real big high flyers. Let's see what else. I wanted to talk about, we've been talking to a few people about how these 3D printer companies are going to be coming back a little bit. Yesterday was talking about being a short X1. Down a fairly decent amount yet today. Not saying short it here. I'm short at $71 or so in the newsletter and personally. This thing is blowing through with volume the previous lows out here, which is opening up the $55.50 level. But this is where even a lot of people that ignore news would probably be served to at least know something about what was going on in the company. These people have gone ahead and added a secondary where a lot of stock is going to be coming. In fact, most of that stock, two-thirds of it, is going to be from insiders. So that's also probably not a good thing. The downside, this is kind of a new thing where you do secondaries and actually get the shares from insiders and sell them. I think this happened in Zynga the same way. And a bunch of people ended up Zynga stock at $12. It's at $3 now. But what you have to watch out for is whether or not the underwriters decide to step in and support that stock. We are right at the level where I think it's $62.50 is where they sold the shares out to everybody else on the secondary. And the question is whether or not the market makers will come in there and try to hold this thing up at $62.50. And that's going to be very interesting out here. But if you want a teachable moment, something to learn, this is where you have a lot of new shares available because the IPO lockup is coming out. You also have some other issues, the secondary also coming out. And this is where you can find, I like the company. It's got some decent products, but you always need to separate the stock from the company itself. Been a very high flyer. Does have an island reversal just a few weeks ago out here. And as we look at this, I basically sold back into that part where it was going back into the gap. And not a bad setup out here. I've tried to short it a couple of times. Got stopped out fairly quickly both times previously because this always looked like when those shares came available, the wheels would probably fall off the wagon. But what you want to be doing today, if you have a chance, is the last 10, 15 minutes of the day, watch how X1s come in and maybe even watch the tape and see whether or not you have somebody coming in. I'm going to have to decide whether to take the money now, which is not bad money out here, or hold on for $55.50. And a lot of that's going to decide on whether or not the market maker, or not the market maker, but the underwriter decides to come in and support that $62.50, which he has an obligation to do. But a lot of times they'll just turn and run tail if it looks like they're going to lose a lot of money on the deal. And X1 not being a huge company, a lot of times they're much more than Facebook willing to turn tail and run. But watch that one at the end of the day, and I think you're going to start seeing what I'm talking about, which is organic reasons in a market for something selling, and that is more shares of supply. Anyway, we'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pazavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, that was the theme from Andy Griffith's show. And, of course, we were talking about the first drunk driver getting sentenced today in 1897. But always loved old Otis the Drunk in that show. It always seemed kind of a nice, good-hearted show out there. Anyway, we've got a caller. We're going to go right to her. I'm sure she's never spent any time in the drunk tank, and that's Patty from Denver. How you doing today, Patty?
Okay, thanks. And you're
I hope
right.
I didn't go too far out there. But you might be a wild woman.
I can't handle alcohol is the
That's
problem.
good.
I fall asleep so fast that...
That's me, too, at night. I used to be able to do it, but all I do is nod off. So
Yep.
we want to look at the Brazil Index Fund?
Right. And not just for a short buzz, but it's been skyrocketing. I watched it at a certain point, a few days ago, maybe a week ago, and the same with SAN, a banking thing. that's in Latin America, and they just have taken off.
Yep. And I suspect that they are consolidating out here at this bottom. You're not long them already?
No.
I think you're probably going to get one more chance down there around $41. This thing's going to probably come back with very light volume. But this may consolidate for a little bit wider, a longer term. And then after the consolidation, if this thing can probably break through, I mean, you've got decent volume yesterday on the thing. It's broken above the previous highs. I just think that, you've had 25 million share low tested by 21 million shares and then 23 million shares. It's never really kind of gotten the low volume I'd like to see. If this thing can come back in, maybe hit one more time about 15 million down at that level, then I think you might have a nice shot at this thing going from there to 56.
Yeah.
So, if you're talking about a longer term trade, but it, for all practical purposes, had a sign of strength yesterday, and this thing may not even get back to that $41 level.
Right.
You might just want to see if you get it at 45.69 if the volume comes back and it's like 10 million shares there, or maybe even back into 44.92, gets back in that range and you get about 10 million shares. That may be the bottom. So you're going to need, you've got two spots. One is there, and the other one is back at the $41 level. So should be able to just put a stop in or something, like if it closes below 44.50, then it's probably going back to 41. And if you can hold that 45.70 area without a lot of volume, and kind of it all dries up, then that's probably a decent bottom. But I would probably say already that this thing would be great if it just had a 10 million share, 15 million share test of that 41 area, which is the only problem.
Yeah. Well, and one of the things that I thought would keep it down there for a while was they devalued the real.
Yeah.
Maybe that was one of the you've got a sign of strength out of here, and maybe it's just one day short covering. After a day of strength, I love to see some kind of follow-through, which you're not getting today. And this market has been replete with signs of strength that fizz literally the next day. And that's kind of what we're getting here today. So I'd give this thing one more 2 days. If you don't get a secondary sign of strength, then you could, like I said, possibly try to do something at 45.50. And if it went below 45, then you probably figure this thing going back to 41. But not bad. It's just, I think you have, if I was thinking long-term on this, I'd probably have an alert when this thing hit around 41.50 or something. And if all the volume really got light on that, that's probably a very good long-term bottom. And you could see this thing back up to 56 if it started getting going. All right.
Thank you very much, Patty. We'll see you tomorrow.
You, David.
Same bat channel, same bat time.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.